on these monthly webinars. I appreciate everyone being on. I am not Steve Jackson, which some of you have probably figured out by now since I just introduced myself as Jim Engle. But Steve asked me to handle today's session, so hopefully I'm able to do as good of a job that Steve has always done in the past, with excitement and with a little flair and obviously information. So we're going to give another minute to get people signed up. Had a few hundred that want to be part of today's presentation. I know how it is in October, getting into the fun season. Everybody's busy running around, giving their plans on how to help out employees. Well, sadly, the ACA is one of those things that you have to be evaluating now to help out these employees. When the year began, we were all hopeful that we wouldn't have to be dealing with the ACA filing on 1094s and 1095s, that Congress and Senate and everyone would be able to get together and come up with a different plan, better plan that helps people out. We were unable to do so, obviously. So that puts big things back into play. How am I going to advise my clients regarding the 1094 or the 1095 filings? Am I even going to mention it? I think that would be a mistake, because I talked to a number of brokers and they're going to use this as a potential way to either retain their current business, current employers that are over 50, or retain new business because the other broker is not advising their clients on proper steps that need to be taken on ACA. So like anything, like everything, controlled chaos is not a bad thing. If you have the knowledge, if you have some expertise and you do a little homework, you'll be pretty surprised at the results that you get. And helping people is one way, clarifying questions is another, to help gain new business. And ACA, like consumer-driven healthcare in the past, maybe like ERISA and compliance current and in the future, are ways to unseat current brokers or to solidify your relationship with your current clients on the complexity, because let's face it, companies' HR staffs are not going up. They're staying the same or being pared down. Who are they looking for advice? Now, this is a filing, right? This is taxes. But they're not going to their CPAs, right? ERISA attorney is too expensive. Who are they going to? They're going to agents or going to brokers. So you're the ones that are on the firing line. You're the ones that they always go to because you're their trusted advisor. So I know today's complexity is more than it was back in, the 90s, for some of you who still remember those. All you really need to worry about was, maybe COBRA, whether the account's in network. But now you have to worry about COBRA. You have to worry about ERISA. You have to worry about the networks and plan design, things of that nature. Consumer-driven healthcare, non-discrimination testing, ERISA, ACA. So without further ado, let's get into today's presentation on ACA, common filing mistakes, the top 10 filing mistakes. But first, a little legislative update. So current legislative updates, 21st Century Cures Act. We did a webinar a little while ago, CE webinar to agents and brokers on HRAs. Part of that had to do with the qualified small employer HRA. So that's your Quisera HRA. So groups under 50, not offering insurance, employers are able to pay for a portion of your individual health insurance. So why would you want to get involved in that? Individual health insurance can be painstaking, could be tedious, but then again, it could be a loss leader to grab a client. So there is in the company, a startup nursing home, or startup high-tech company, or startup whatever, that has a chance to be 15 employees today, but 150 tomorrow. We've all seen it happen. So this may be one of those ways to help a client, and as they grow, you grow with them. And the client could be a great life client or disability client. So, Concierge could be one of those lost leaders helping someone out in order to get other business, other products from them in the future. Make sure when you're going in that when you're reviewing current clients' business that you double check their plan documents, especially premium only plan or ERISA. If you're adding an HSA and you want the employees to use pre-tax money to fund their HSA account, you're going to run it through payroll, the plan documents need to change. So just as part of your blocking and tackling with the clients, review the documents, because you will be surprised how many mistakes there are. Or maybe you won't be surprised. ALE status, applicable large employer. We're going to talk more about that today, as we will on your W-2 reporting. Cadillac tax. So a few years away. It's going to come quick, though, unless they get it pushed off even farther. So just remember the Cadillac tax for an individual is $10,200. For family, $27,500. What goes toward Cadillac tax? Of course, medical premium, but contributions to your HRA, employee pre-tax payroll contributions to your health FSA, along with pre-tax contributions to an HSA, employer contributions to the FSA, and employer contributions to that same HSA. So, what are some of the strategies that other companies are doing? Maybe adopting a defined contribution, introducing private exchanges. I've seen post-deductible HRAs come in. Because remember, for the HRA, to count it toward the Cadillac tax, it's the value of it, the COBRA rate of it. So if you have low utilization, let's say it's 20%, then you're going to have a low HRA COBRA rate, which counts toward the Cadillac tax. So maybe it's a HSA HRA combination where the employee is using post-tax money to fund his or her HSA account, and the employer puts a post-deductible HRA with low utilization on the back end, which will probably save. So there's a couple of different things to be thinking about, trial balloons to talk about with your clients, but I'm starting to see a lot of HSA HRA combination, post-deductible HRAs, which will not have that great of a hit on the Cadillac tax. And then the audit activity. I was talking to a broker a little while ago, and he says, no one gets audited. Last year, I was working with this broker, and they were introducing a ERISA application or ERISA proposal to their client, asked me to go along, which I did. And the broker was lamenting what he should talk about. And I go, well, do you have any stories? He goes, well, yeah, a few months ago, somebody from the Department of Labor knocked on my door, and this is around Christmas time, knocked on my door, and he was looking for paperwork. He's wanted to go through the books. So he wanted to do a cold call audit a few days before Christmas, looking over his information, the broker's information on his welfare and benefit plans. So it is going on out there. They are cold calling. Bury your head in the sand if you want, but this is, again, preparation. These things are happening. So let's go. Number one on the ACA filing mistakes, not properly reporting for employers covered under multiple employer plans. So basically, applicable large employers, you got to report under 6056 for their full-time employees. And those that are qualified under a union plan, even though the employer is not directly offering those employees coverage, those union members covered, you still have to account for them, right? So the IRS has created some special codings by the bargaining unit to confirm that you meet the criteria. And usually it's IH on line 14 and 2E on line 16 on the 1095C form. So if you are dealing with a union, even though the union is not part info regarding coverages offered. So the IRS determines if the penalty resides with the employer or the employee. So even though the person's waiving coverage, you still have to report on the 1095 forms on if it was offered, if it was affordable. Then the IRS plays the umpire on this, who gets the penalty. So you got to decide what code applies. Usually on the safe harbor for affordable coverage, line 14 is IE, and line 16, 2F. So even though the person's waiving, they being the employee, you still have to report regarding coverage of offered. And again, the IRS, they make the call. Where's the penalty go, employer or employee? If there is a penalty. So this is kind of a snapshot. So even though Mindy waived coverage, doesn't change the fact that she was offered coverage for all 12 months, i.e. offer of coverage. Again, if Mindy waived, what was the amount? So it was affordable. And 2F, Mindy waived coverage, so we cannot enter 2C enrolled. We're going to go with a safe harbor, so we can put 2F in all 12 boxes. So for your waivers, working with the client on this, maybe they say their payroll company is doing it. Just double check. You know, we all need partners. Clients need partners. Payroll company in this instance maybe be helping out with the 1095 filings, but they're going to look for your expertise also. So counting together, you can definitely help out the employer. Number 4, not properly reporting full months versus partial month offer and enrollment. So offer of coverage must enter one of 9 codes for each employee every month. You know, you use the all 12 month box if code coverage is the same, and health coverage offered for entire month, not partial month. So if it's a partial month, report coverage is not being offered. So it's the entire month for coverage, not partial month. And line 16 used to indicate the reason why coverage was not offered. So if your employee was only offered coverage, only had coverage for half a month, that's a partial month, it's reported as not being covered. So that's come up from time to time in regards to full month coverage versus partial month coverage. Number 5, all employers are required to file electronically. Number 5, what's the answer to that? So employers that are required to file 250 or more returns must file electronically through the ACA Informational Returns, the AIR program. So 250 is that magic number that you're required to file. Now forms 1094B and C, they're doing by paper. So possible consent for electronic format. So those are one of the things on the 250. Must file electronically. Fewer than 250 can be electronically or paper. Number 6, large employers that offer self-insured group health plans must use both sets of forms 1094 and 1095, B and C. So self-insured employers will satisfy the obligations using just 1094 and 1095C. Part 3 is where you got to fill out information on the self-funded. Fully insured employees use 1094C and 5C. And if you're self-insured, you're under 50, you have to report as the employer. Remember, insurance companies are handling this if you're fully insured, the 1094, 1095B. But if you're self-insured, under 50, and there's a lot more groups out there than there were a few years ago, going with self-funded plans, you have to be counseling them on make sure you do the filing, you the employer. So that's the 1094 and the 1095B. And here's a snapshot of the 1095C, covered individuals, self-insured coverage. check the box for each individual, not employee, individual enrolled. So a lot of people can get tripped up on this. So in regards to self-insured, you have to be putting this in on the 95C. Under 50, you got to be using the Bs. You, the employer, are responsible since you're self-funded. Incorrect COBRA coding in reporting is number 7. So COBRA coverage made to a former employee. So code IH upon termination. Qualified beneficiary that is on COBRA, use 2A instead of 2C in line 16. So 2A, employee was not employed during the month. 2C is employee enrolled in health coverage offered. And your full-time employees that has reduction of hours, use the same code. And 1095C Part 3, number of months covered both full-time and COBRA. So what's number 8? What is a deadline again? So depending on what vendor you're using, we're coming close to the deadlines. So for an outside vendor, well, for us, basically PrimePay, this deadline, sign-up deadline is 11/30. The setup deadline, where the information has to be plugged in to our ACA Navigator, is 12/15. And print and press deadline, so we can get the proper forms out, is 1/15. So depending on who you're using, you're going to have deadlines and you're running up against them real quick. So 11/30, sign up deadline, 12/15, setup deadline, and print and press, 1/15. IRS deadlines, they have to be delivered on 1/31, or postmark 1/31 for the IRS deadline. That's 1095C, employer furnishing to the employee. And the employer e-files, 4/2/18 is the deadline. Must file electronically. So these are some of the deadlines that are coming up. If your employees have no idea what they're doing, or your clients have no idea what they're doing, going to have to start looking at it. So if you need help, obviously we can help you, but these deadlines are coming up relatively soon, sooner than I would like to see. Number 9. Failure to account for stability periods for employees experience a reduction in hours. So what happens if your employees go below 30 hours and they're variable hour? They're still eligible, right? So for those variable hour employees, when they're in their stability period, still need to cover them. But what happens if they're unavailable to afford coverage? This came up last year, actually. It was a nursing home, and the person was down to 2 hours. Just, they couldn't even afford their health coverage. Review with counsel, but our estimation is it's okay to take them off the health plan at that point. So you need to account for stability period. That's the period, again, where they are on the insurance, no matter how many hours they're doing. You need to offer them or keep them on coverage, even if they dip below 30 hours. You're measuring them. We'll talk about that in a second, just a recap. But you can't take them off the insurance. Only large employers that sponsors group health plans are required to report. That's an easy one. ALE, 1095 forms, must report. But your self-insured groups, so your 1095, again, B and C, under 50, 1094 B and C. And if you're fully insured, 1094 B and C by the insurance company. So for those employers that are self-funded, under 50, you got to be doing the reporting for 1094 B and C. So those are the top 10 issues and mistakes that we've seen. So general ACA compliance, we're just going to run through just a little bit more blocking and tackling. minimum essential coverage, Medicare Part A, CHIP programs, individual group health programs, all those meet the minimum essential guidelines. Medicare Part B only, I don't know why you would have that, but if you do, that does not count. So just be aware of that. And then the credits, anywhere from 100 to 400%. FPL, you may be able to get premium tax credit. So everyone individually got to have insurance, still in play. 9.69% is the affordability aspect. So what are the large employers facing? So again, if those employers are right on the bubble, got to count the hours. So in 2017, at least 50 full-time employees. 120 is a magic mark. Full-time plus total part-time hours worked per month, divide by 120. So your full-time and your total part-time hours per month, divide by 120. If it equals over 50, welcome to the club. You now have to account for your employees and track your variable hours. So first thing, especially the ones that are on the edge, need to double check if they're an ALE. But what about the aggregated groups, right? So control groups, trade business under common control, business forming an affiliated service group, you got to count them all. So if they're an aggregated group, they count toward the ALE status, treated as a single employer. Penalties apply for that individual employer. So your small employers with fewer than 50 still may be considered beyond benefit eligible, as we saw before. Counting the hours on those part-time employees to see if you're going to be over 50. And your Form 1094-C, employer must identify all ALE members, and you need to double check who's going to be the authoritative transmittal. So for your commonly controlled, who's the authoritative transmittal, counting all employees as part of the group, and need to account for all employees, and you're over 50, even though you may have 4 or 5 different EINs, control group, need to be filing. Classification of employees. So, definitely key on your full-time employees. Part-time, variable hours, seasonal. If you count a full-time or count a variable hour employees as full-time, then you got to be offering them insurance. Got to put them on within 90 days or whatever your plan documents read. Or even worse, the person is actually full-time becoming variable, you may be looking at penalties sometime down the line for not offering that person insurance prior. So you got to classify the employee correctly. Variable hour employee, know them at the time, unknown at the time if they're going to be working 30 hours or more a week. And just to double check your measurement period, new hires versus ongoing, so your initial measurement period versus standard measurement period. And 30 hours or more, or 130 hours to see if you're full-time. So that's a little bit different than counting to see how many employees you have, which was 120. So just again, important to note, companies have a common owner or otherwise related, you got to combine them. You can exclude seasonal worker. It's just something to think about. So tracking the employer hours, large employers must track the employees, again, 30 hours a week, at least 130 a month. Included hours worked and hours paid but not worked. So your vacation or leave of absence, those count also. You can exclude owners, family members, and seasonal employees. Now again, your 3 different measurement periods, your standard, an initial measurement period, your admin period, and your stability. So your measurement period here is at anywhere from 6 to 12 months that you're measuring the employee's hours. Admin period is that time frame where you're collecting the data, offering insurance on which the employee goes during your stability period. So in this case, we're doing a 9-month standard measurement period, which is for all your employees. And your initial measurement period is 9 months also. That's for new hires. We're doing a 90-day or 3-month admin period to collect the data, and stability period where they're on the insurance for 9 months. So we go 3/1 to 11/30/2016, do the recording, another standard measurement period here, and stability period. So you're measuring at the same time as you're offering. They're on the plan, they satisfied the requirements. 3 months later, offered insurance, accepted insurance, being measured again, because they may drop off the next time frame. And then a new hire is being measured on the same 9-month time frame, but being measured at the same time during the standard measurement period. So payroll is a key component to be working with, to have as a partner, to help you help your client with the standard measurement period, the initial measurement period, the administrative period, and the stability period. If you're not working with a payroll company, you really have to evaluate that, because they can make your life a lot easier, because they're the ones that are getting the data. They're the ones that are collecting the hours, and they're the ones that ultimately the employer is going to rely on to see who am I going to offer health insurance to. So definitely a key component in who you work with. You have a CPA as a partner, you have maybe a ERISA attorney as partner, you have your TPAs. Payroll also needs to be looked at. So affordable coverage. Employer decides not to offer coverage, so they got to pay. So 50 employees this year, $22.60 for 2017 is the penalty. So it's number of full-time employees, let's say it's 100, less 30 times the penalty is what you're going to have to pay. Well, what happens if the employer decides to offer health insurance? They're going to pay, but maybe it's not affordable for some. So you got to cover 95% of full-time employees. Employers plan for at least 60%, and affordability is 9.69. If any employee gets a subsidized credit, they find that you are lacking on affordability, it's $33.90 times that employee. So your ACA reporting. So if you have over 250 employers, this is what's not reportable. Your long-term care, standalone dental, ADD, workers' comp. Don't have to have this on insurance, but reportable. Your major medical plans, including COBRA premiums, employer contributions to the FSAs. Doesn't happen much, obviously. You don't have to do the employee contribution. Well, it's already on there, but you do not have to do the employer contribution. And required employee charges a COBRA premium on EAP programs or on-site medical. So if you have over 250 for the previous year, right, preceding calendar year, this is what's reportable. And also domestic partner coverage included in gross income. So once again, on the penalties, you got your pay and your play, $22.60 or $33.90. APTC, again, advanced premium tax credit. And your reporting requirements. And these are, these can be stiff. They want you to file, even if it's, again, best of your ability. We're pretty much getting out of the realm of everyone gets a trophy. Got to be pretty exact. We got to be working with these people to help them out. I'm still hearing people have not filed. So it's increasing from 100 to 250 per return. So employer with 75 employees will incur $18,000 penalty. And penalties double if failure relates to both the information return and the statement. Intentional disregard, I ain't doing it. No caps on limit. Annual cap on penalty from 1.5 mil to 3 mil. A failure corrected within 30 days increased from 250,000 to 500. There's some big penalties, guys. Bottom line, there's some big penalties on not filing, on putting your head in the sand and just saying, I'm not doing it. You got to do it. You got to try, right? We'll help as much as possible. But, you know, brokers that I've talked to, yeah, they're going after this. ACA is back in play. Some people had, God, they're 100% sure that they wouldn't have to deal with it this year. They do. They being the broker, they being the client. So these reporting mandates are real. We'll see what the administration does, but for all intents and purposes, they're going to be looked at. So what happens if you do have an employee that gets a subsidy? So ACA requires that the marketplace notify the employer of the employees enrolled and received an APTC, which we just talked about, tax credit. So starting 2016, this happened. And I've heard stories of brokers telling me, yeah, these clients are getting letters all the time. Another reason why to have a payroll partner, just because you're going to have all the data, especially if it's linked in with the ACA tracking system. So employers who have employees are received, complete address, and enforce a mandate. So employer notice program is going on right now. So be prepared. So what happens? So you got 90 days to appeal. You got to fight it. Employee has access to affordable care. Maybe that's the ruling. You can show them the data, show them the information. You got the employer appeal request form. You can go on this website here, healthcare.gov. And some of you probably have already done that. And marketplace appeals centers will acknowledge receipt. So they'll let you know, hey, we got it. They're going to review it. And they're going to give you and the employee outcome of the review, and they're going to let you know which person is going to be penalized. So this is going on now. Be prepared that it may happen to you, especially on some of these larger companies. But the employer notice program is going on right now. So review with your clients. Get to know who your employer uses for payroll. Who are their partners? What are they doing? Is it, you know, I hear this all the time on POP plans where a client will say, oh, my payroll company is doing it. The payroll company is taking out the pre-tax deductions. They're not doing your plan well, they may be, but I've seen scenarios where they're not doing your plan documents. They're not doing your summary plan description. Same thing with the navigation. Oh, they're counting my hours. They're taking care of it. Really? So double check who the payroll company is, if they are even doing this, if they're even aware that you're a aggregated group, right? They may not even know. Find out how many might get engaged to help your employees with compliance. Oops. Think about solutions and revenue generating that analysis can create. Audits are increasing. You know, they simply are. You know, I was talking to Arisa attorney at one of these NAHU functions, and her business has gone up, 50%. Easily, she said. That it's just booming. Good for her, bad for us, but it's reality. And some brokers are using it to their best interest, because if you are not helping your client on some of these issues, who is? And don't forget those employees sitting on the bubble, right around the 50. They're going to need help. So review this with your clients. So next step, information from HR, payroll, and benefits, start tracking it, start grabbing it. Determine if your business is ALE. What system are you using for ACA reporting? Does your business have the right tools for tracking? Review IRS information for Forms 1094 and 1095. It's up to you. And I'll see if there's any questions currently. Let's see if I can. Just general comments. Actually, I'll be going through all these questions. So if you have, I'll let this go for a little bit. If you have any questions, please feel free to plug this in, and I'll be getting the answers back out. So I'll give a couple more questions. And
Jim,
yeah.
Jim, one question is that I see is just maybe touching on the union reporting section again. I think you had touched on that a little earlier in your presentation as far as the filing, or the filing, the report.
So you're still responsible, even though you are not offering coverage to those union members, to be part of your 1095 filing. So even though you're not offering the insurance, you're still responsible for the filing for those union members. So a couple more minutes, we'll allow some questions. Steve, any other questions out there?
One question that had come up just in regard to coverage, I guess the question was surrounding, the penalties for offering coverage. The question was, is it 95% of the eligible need to be covered, or just the offer of coverage needs to be 95% or more? And so just maybe if you could clarify that.
Yeah, for the 95% rule, 95% have to be covered. I am correct in that, am I?
It is offer, just as long as the employer offers coverage to at least 95% of the full-time employees, including the dependents, then, they would be safe, from any penalty.
Perfect. Yeah, a lot of different rules out there. Any other questions that pop up? For some reason I have a tough time looking at them.
Yeah. Well, there's a question here just about penalty for employers who are under 50. You've talked a lot here today about, really what a large employer, an applicable large employer, is going to need to fulfill as part of their obligation. Can you speak just a little bit more, maybe as for a small employer, where a penalty could exist or why?
Well, for small employers, if they're self-funded, they have to do the 95 or 94 and 5B. So it's still going to be the same penalty as far as the large employer, from what I read. So there's still that filing issues that you have to go through on the small employer, and the penalties are going to be basically the same.
Yeah, no, spot on, Jim. I had noticed another question early on, which I had responded to, just, where a small employer has a fully insured plan, there was just some confusion there as to whether they need to do some reporting or filing of some sort. But the carrier, in that respect, under a fully insured plan, they're going to create, those 1095B forms and, do any necessary filing. So in that case, the small employer under a fully insured plan relationship, there's really nothing they need to do in regard to this.
Right. So self-funded, your smaller groups under 50, more and more are being written, need to talk to someone on who's going to be doing the filing, because the employer may be unaware, thinking that I'm under 50, I don't have to worry about filing. Well, you're self-insured now, so you do.
Yeah. A good question came up just on maybe opinions out there. So the question is, what do you think? Do you think that the IRS will postpone the deadline again, like they did this past year? What are your thoughts? Do you hear anything? Do you know any inside story, Jim?
I don't. I mean, we've seen situations where on 12/30, Congress passes something that's retro to the entire year. Nothing will surprise me, but in terms of being delayed, we can't go into this year thinking it's going to be delayed, so we'll work on something else. We got to act as if it's going to happen this year in the time frame that they're telling us. And if it does, then we're prepared. If it doesn't, then we're surprised and we're happy. But I don't think we can really base our decision on what we're going to do on a potential delay. We got to get it done.
Correct. Let's see here. Actually, there's a lot of good questions here with things, and some you've already covered, Jim. Could you touch on, there is a question here on HRAs. Now, generally speaking, HRAs, there's some really relief from reporting, but do you have any comments, just because that was a question that came up, just, do employers under 50 with an HRA, are they required to file for the HRA, was the specific question.
Yeah, not for HRAs. You're not. You don't have to file for the HRAs under 50. So just your group plans, even though HRAs are technically a group funded plan, it's integrated in with a traditional group health plan. So HRAs in this aspect, you do not have to do under 50, a 1094 B and C filing.
Mm-hmm. Correct. Yeah. No, good. One of the common questions that have come through here, Jim, so just maybe I can answer them all because there's been several that are out there. Several great comments about the presentation, but interested in the slide deck and so forth. So just so that everyone knows, we generally record, as we did today, record this session, this webinar. We post the recording on our public Broker Concierge YouTube channel. It's usually posted by Friday, so 2 days after. For those of you who are Broker Concierge partners, we always offer to you the original slide deck, and that will be posted into the broker portal, again, usually within 2 days after the webinar, so generally here by Friday. So I did just want to answer that. And Jim, I'm not seeing any other questions. I don't know if you want to talk too just about our sales promotion here for year end, which can impact a lot of some new business here for these brokers.
Sure. Yeah, so actually for the 11/1, 12/1, and 1/1 start dates, we're going to be offering a sales promotion waiving the setup fees. So everyone that has a HRA, FSA, HSA, or ERISA plan that they need help with, be more than happy to help you, and we're going to waive the setup fees. Also, if you're doing a combination plan, where you're doing maybe an HRA and an FSA together, not only do we waive the setup fees, but we will give you a $100 voucher on the premium. So for combination plans, that's something else that we're going to be looking for. For employers that, or for brokers that sell 3 or more units, could be a couple of FSAs and an HRA. If you do that during this time frame of 11/1 to 1/1, you get a $100 credit, or a $100 gift certificate per unit. So it could be a total of $300. Minimum is 3, so it would be retro. So if you write 1, we appreciate the business, but you have to write at least 3. And then for our top brokers, so we like to make it a little bit contest. We're in sales, so for the top 3 brokers in the country that write the most business, you will get a $500 voucher that you can use, of course, obviously any way that you want. So for the top 3 brokers in the country, you will get a nice little prize at the end of the year.
Good stuff. I mean, we are super excited to be able to offer this year-end promotion. We think that it has some great value for you broker concierge partners. You've experienced some regular commissions from us, and that's generally paid to the agency. But this extra, these gift cards, these $100 and this $500 is actually paid to you directly. So we're excited about that and look forward to supporting your business activities here through this crazy fourth quarter and into and through January. So thank you for your business thus far, and we look forward to bringing a lot of things across the goal line for you here in the next coming weeks and months.
Perfect. Well, once again, I'd like to thank everyone for attending today's session. Hopefully you came away with something, maybe a little bit of knowledge to help you help your clients, or we're in competition, so maybe one of these things that we talked about today can help you win a piece of business that maybe normally you wouldn't have. So again, if you do have a question that does pop up, talk to your account rep or your sales exec, or my email address is jingle@primepay.com, and we'll be getting you the recording and the copy of this webinar. And again, thank you for your time and have a great day.